What's up, everybody? Welcome back to Altcoin Daily. My name's Austin. Great to have you checking in. Here at Altcoin Daily, we drop a video about cryptocurrency every single day. That means tomorrow we're dropping a video. Next week we're dropping a video. So if you're at all interested in anything Bitcoin, altcoin, market news and updates, or altcoin announcements, be sure to subscribe to the channel. You know what? You wake up in the morning, you have your cup of coffee, maybe you pet your dog, and you watch your Altcoin Daily video. That's what I would do if I had a dog. Anyway, today we're talking about, has Bitcoin futures trading affected the Bitcoin price? Because check this out. This is the market right now, as it stands, at least at the time of taping, and the market's still in the red over the last 7 days. The market cap, we've struggled for months now, or for a long time, to get/stay over anything above 400 billion, and Bitcoin is, just same old, around 8,300. Bitcoin has not seen over 10,000 for months. And let's check out this chart. Bitcoin over the last year. Some of us blame Bitcoin futures for this reason, because these were the all-time highs back in January. Many of us had thought that Bitcoin would be a little more bullish by now, but it was right around here that Bitcoin futures were even announced that they would begin starting to trade, and it was right around here that you were able to trade Bitcoin futures. And so some people blame those futures for the market, because not only do big whales, big investors, they want to see how low they can drop the market, but with Bitcoin futures, you can bet against Bitcoin. Whoa. Let's take a step back. And before we even talk about any of this, first off, what are futures? How are they different? Why would somebody even choose to invest in a future when they could just invest in Bitcoin? Well, that's what we're getting into today. If you like learning about the market, then I think you'll really like this video. And let's check this out. Has Bitcoin futures trading affected the Bitcoin price? Well, November of last year, the Chicago Board Options Exchange announced plans to introduce Bitcoin futures trading. And it was not only this exchange, the CBOE, but a couple other exchanges exchange futures for Bitcoin. And once this released, obviously Bitcoin saw new all-time highs, and that begged the question to me, well, did Bitcoin see new all-time highs because it was just a lot of hype? Regular people like you and me were just investing in Bitcoin, or was it because of the futures? Well, apparently it was in part because of the futures, because it proved phenomenally successful. It was revealed, and this is a recent article, that on average, that this exchange creates 7,000 new Bitcoin future contracts per day, and that's just this exchange. And before we get into how a future works, and we're doing that really quick, guys, I just want to show you. If you guys wanted to trade futures, you could go to this site right here, and you could trade. This is when the contracts expire. You could check out the contract specification sheet. But here at Altcoin Daily, we try and keep it as real and honest as possible. So I'll be honest with you guys. The majority of people investing in Bitcoin futures, they're institutional, accredited investors, or they're brokers that do it on behalf of their wealthy clients. And that the reason for that is it's because regular Joes, average Joes like you and me, one, we don't have enough money to qualify for the initial margin requirements, which we'll get into soon, or I hear it's too complex for the average layman to get into. And I know what you're thinking, just investing in Bitcoin, or in cryptocurrency, that's a little complicated too. So I'm not sure, but apparently it's too expensive, too complex. So most people stay away from it, other than the big fat cats. Interesting. But let me ask you this. But why would you trade futures when you can just trade Bitcoin? Tune in with me, guys, because I don't have any highlighted material for this, but the reason that you would trade futures instead of just investing in Bitcoin is this. The future market serves as a risk management tool. So trading in futures with different groups, it's a risk management tool. So it doesn't 100% just focus on profit. It instead mitigates risk and kind of focuses on a balance. So it's essentially you would invest in futures just to kind of hedge your risk in investments. That's what some people say. But what is future trading? Well, let's use this as an example. How Bitcoin futures work. And just keep this in mind. Here at Altcoin Daily, the cool thing about this channel is that we lay this stuff out in a very easy to understand terms. That's why you guys subscribe. But I'm just summarizing today. So this is just a brief summary. Use this as a jumping off point. But having said that, let's get into it. Well, investing in futures, it allows traders to speculate on the price of Bitcoin without actually having to own any Bitcoin. So let's read this. Futures contracts allow traders to speculate on a price of an asset without actually having to own the asset. The speculators profit, so you make money by buying or selling a contract in anticipation of that asset's, like Bitcoin's, price moving in a certain direction. So you can bet for or against Bitcoin. If a trader is selling their contract, they're called a short speculator. That's betting Bitcoin will go down. If a trader is buying a contract, they are called a long speculator, betting on a Bitcoin will go up. And this is very summarized. But you guys are still with me. If none of that made sense, let's use this example. This is investing in futures. Let's say Bob seems like a nice guy, wants to buy one contract at a price, and the price is $50,000. And in this scenario, let's just say Bitcoin is at $10,000 per Bitcoin. Well, for just one contract, Bob has to pay $50,000 because I guess in this example, the minimums for CME group, a futures trading group, is 5 Bitcoin. 5 Bitcoin is the minimum. So if he's buying one contract at $10,000 per Bitcoin, the price for that contract is $50,000. Let's keep going. Before Bob owns the contract, Bob needs to deposit the initial margin. And think of the initial margin similar to a down payment. So it just shows that the trader, Bob, intends to follow through with their contract. Typically, this is 5 to 10% of the total contract. So if Bob's initial margin is 10%, Bob will own the contract after he deposits $5,000 into his trading account. So Bob's just putting in $5,000 and he owns that $50,000 contract. Guys, Bob's killing it. Now, let's assume Bob deposits that $5,000, buys the contract, and is a long speculator, meaning he believes / hopes Bitcoin price will rise above the spot price he paid for his contract. So he's betting Bitcoin will rise above 10,000 per Bitcoin. Team, there's a little Bob in each of us, I think. And so Bob is betting for Bitcoin. This futures group, tune in, guys. What I'm about to say, this is a little technical. Just get past it with me together, and then we're going to put it in perspective we can all understand. But just get past this technical stuff with me together. This futures trading group has set the tick, or the minimum price movement of the trading instrument for their Bitcoin contracts at $5. So what is the minimum tick? It's basically the minimum fluctuation. So if it's $5, if Bitcoin price increases or decreases by $4, nothing's changed. There's no gain or loss for Bob because it's below the minimum fluctuation. However, each time Bitcoin at least increases by just $5, Bob's going to gain or lose if it goes down by $5. But if it increases by $5, Bob will gain $25 on his contract because each contract is composed of 5 Bitcoin. This is the point. That even if when Bitcoin just goes up by $5, Bob's already making money. If it goes down by $5, Bob's already losing money. And he only had to put down, or let's read this before I say what I'm about to say. Keep in mind, Bob only paid $5,000 to become the owner of a contract worth $50,000. And then the $40,000 that Bob did not have to pay is borrowed money. In other words, Bob's Bitcoin contract is leveraged. Because futures contracts are highly leveraged, investing in futures is considered very risky. So obviously with high risk comes high reward. The more contracts a trader owns, the greater the risk, the more money he can make. But that's one of the reasons that whales get involved, because they can make a whole lot of money. And you know what? That's basically what future trading is in a nutshell. I hope you took something out of Bob's little example. Bob, if you're out there, I would love to talk to you one-on-one. But let's put it in perspective, because that's in a nutshell what future trading is. But let's answer the question. Do we blame Bitcoin futures for this bearish market, for this market manipulation? Short answer is nobody 100% knows. Nobody 100% knows what's causing this market manipulation. And if somebody tells you that they do, they're either the ones causing it or they're a dirty liar. But again, to the question, do we blame Bitcoin futures for this market manipulation? The other short answer is yes. Yes, we do. But here's the thing. Market manipulation, it's nothing new. Yes, the futures were started here and we've seen a ton of manipulation in the market, but I'm not going to. But if we were to zoom out, because we have many times on this channel, market manipulation has been around since Bitcoin's been around, since trading's been around. In future trading, it's the same exact game, different day. It's another way for whales to manipulate the market. So the banks want in, but they don't want in, some of them, till the market is low. And also, some people are betting that Bitcoin will be low. That's future trading. All right. Short answer, and the other short answer is there's nothing we can do. For the people that say that future trading has ruined everything, it's ruined Bitcoin, because if you read some of the comments or articles, people say Bitcoin hasn't been the same since future trading started. In my opinion, nothing is for certain about this market except for change. Change is the only constant. So the market's going to keep changing. There's going to be more regulations, more ways to trade Bitcoin in the long run, and that's fine. That's good. It means money's coming in. What Bitcoin futures shouldn't do, you shouldn't think that Bitcoin futures are going to affect the market in the long run. Because right now, the waves are big, but in the long run, when we get more water in this ocean, it's not going to affect Bitcoin more than any other types of big trading will. That's the truth. All right, team. I hope you took some value out of this video on Bitcoin trading futures. At least now we have a jumping off point to do more research. Something that's cool about this channel, before you guys all go drink that second cup of coffee, something that's cool about this channel is that we have a wide spectrum of subscribers. We have a lot of average Joes. We have a few whales. We have a few people that actually trade Bitcoin futures. So let me know down in the comments everything I left out, important details that you think that are important for everybody to know. So check down in the comments and let's get a discussion going. All right, team. My name's Austin. This is Altcoin Daily. We'll see you tomorrow. Peace.